For over a decade, the US economy seemed unstoppable. We were riding high on the longest bull market in history, fueled by low interest rates, tech innovation, and a consumer-driven boom. But beneath the surface, there were cracks. Cracks that COVID-19 would soon split wide open. Let's rewind to 2009. The economy was clawing its way out of the Great Recession. The Federal Reserve slashed interest rates to nearly zero and held them there for years. Businesses recovered, markets soared, the housing sector rebounded. And by 2015, rates started to rise again as the economy strengthened. From 2015 to 2018, the Fed gradually raised interest rates up to 2.5%. But even as markets hit record highs, there were signs of trouble. Trade tensions, slowing growth, and the infamous inverted yield curve had economists whispering about a possible recession. Then came COVID-19. What started as rumors of a strange virus that started in Wuhan, China, quickly escalated. And by early 2020, it was clear this wasn't a local outbreak. This was a global threat. Flights were grounded, borders closed, and supply chains faltered. And by March 11, 2020, the World Health Organization declared COVID-19 a full-blown pandemic. Within days, the US economy slammed on the brakes. Investors panicked, markets plummeted, and between February and March, the S&P 500 lost over 30% of its value, bottoming out on March 23rd at 2191. It was the fastest drop into a bear market in history, and while Wall Street was in chaos, Main Street was also bracing for impact. The Federal Reserve stepped in, slashing interest rates to zero, and flooded the economy with liquidity. Congress passed stimulus packages, sending out checks to millions of Americans, and for many, this was a lifeline. But for others, it was extra cash, and they turned to the stock market. Platforms like Robinhood saw explosive growth, with funded accounts jumping from 12.5 million in 2020 to 22.7 million in 2021. And while some industries thrived, others crumbled. Travel, hospitality, and retail were decimated. Meanwhile, companies like Zoom, Peloton, and Amazon became household staples. Food delivery apps exploded, and home gyms replaced fitness centers, but this wasn't all sunshine and gains. Big tech overhired to meet pandemic demand, only to face massive layoffs in the following years. And let's not forget about the CEOs. While their companies laid off workers, many pocketed hefty bonuses. But something remarkable happened. The stock market, fueled by cheap money in retail trading, staged a dramatic recovery. By August 18, 2020, the S&P 500 had reclaimed its pre-pandemic high, closing at 3389. And from there, it kept climbing, setting new records in the year to come. As the stock market roared back to life, 2021 started to feel like a bubble in the making. Investors were riding high on optimism, pouring money into everything from big tech to speculative stocks. Meme stocks like AMC and GameStop captured headlines, driven by social media-fueled buying frenzies on platforms like Reddit and X. Cryptocurrencies also surged, with Bitcoin reaching an all-time high of nearly 69,000 in November of 2021. But this unprecedented recovery came with risk. The speed at which the market rebounded was unlike anything we had ever seen. Some called it irrational exuberance, a market propped up by cheap money and stimulus checks rather than strong fundamentals. By late 2021, inflation was creeping up, and whispers of a market correction began to grow louder. It was a reminder that while the recovery was impressive, it was built on shaky ground. And of course, this recovery came at a cost. Stimulus checks and supply chain disruptions drove inflation to levels we haven't seen in decades. The M2 money supply, essentially all the cash available for spending, exploded, putting upward pressure on prices. By 2021, the cracks in the supply chain were affecting everything from semiconductors to toilet paper. Inflation was soaring, and the Fed was facing tough choices. COVID-19 didn't just change the economy, it redefined it. Remote work became the new norm, reshaping cities and industries. Digital transformation accelerated as businesses raced to adapt. And perhaps most importantly, the pandemic exposed vulnerabilities in our healthcare systems and our supply chains. So here we are, a few years removed from those early dark days of the pandemic. The lessons we learned about resilience, adaptation, and the fragility of our systems will shape the next decade. But there you have it. If you made it to the end, thank you so much for watching. I know COVID was kind of a dark time and we like to forget it, but let me know, comment down below what the best thing was that came out of COVID for you. Make sure to subscribe for more videos on money and investing. That's it for today. We'll see you in the next one. Peace. Oh, and I almost forgot to tell you,